Hello Market Club members everywhere and fellow traders. Today we'll be looking at the Internet portfolio. That's Market Club's new Internet portfolio, and just taking a really in-depth look at how it's doing in light of the current trend in the NASDAQ. Well, first of all, let's take a look at the major players we have in this portfolio. We have Amazon, Netflix, Facebook, Yelp, Yahoo. These are all diversified. They're all not in the same business. But look at our trade triangles. The only one that we have a green monthly trade triangle is Facebook. Why is that? We'll be looking at all these stocks in detail and showing you exactly where you would have got in and got out. Now, this portfolio last year produced a profit of 65% on invested capital, which is pretty good. It's already off to a very good start this year based on what's been going on in these stocks. So let's go to our first stock, which is Amazon. Well, here we are looking at the stock of Amazon. You can see our trade triangles are all red, indicating a strong downtrend. You also have the RSI below 50, well below 50, and also you have the market really trending down, which is somewhat of a surprise. Amazon, as you know, is a juggernaut, but its margins are so small, people are beginning to wonder if it's ever going to make money. But our last signal was right here, and that came on the March 24th at $354.48, $354.48. Now, presently, we have a profit in that position of about $66. It's about a 20% return since March of this year. So it's doing, as I said, we're doing very, very well this year using our Internet portfolio strategy. So let's move on to our next market. We're looking at Netflix. Now, Netflix, our last signal was right here. That came in at $312.10, $312.10 on the 28th of April. Now you can see this produced a loss because the market's currently at 321. So we have a loss of approximately, I would say, about 3% or $9 in the stock, and it's not over yet. But we are below the RSIs, below the 50 level. All of our trade triangles are red, indicating the major trend in this stock is down, and that's the important thing to remember. Moving on, looking at Facebook. Now, Facebook is the one we said, here's the monthly, still positive from $29.07. We're currently trading at $56.99. Now, we did have a weekly to exit this position. So our last trade that we had was based on our trade triangles, was right here, was buying at 63.37 on the 3rd of February, right there, you see the date, and exiting that position at $66.51. So that's about a gain of about $3. Not big, but certainly about 5% return on capital. But we're out of the market from $66.51. We're currently trading almost $10 lower than that right now, but neutral position on this stock. Now, this is Yelp. Now, they do reviews of restaurants and cafes and so forth, and our signal there came in right here on the 4th of April at 66.47. Now, at this point in time, we don't know what's going to happen because no one has a crystal ball, as I mentioned. But the reality is this market's down now, trading at 53.62, and that has a profit of about $13 or about 20% just since April. So these are big stocks. You want to pay attention to them. This is a very easy portfolio to follow and trade. You can trade this with probably less than $20,000, even $10,000. What we looked at was a $50,000 account, broken up $10,000 for each particular stock, and that's the key thing. You just break up the money in buckets of 10,000, and you put $10,000 and you buy as many stocks as you can get for that. All the rules are up on the board, so you'll see exactly how we do it. Next stock is Yahoo. Yahoo basically has a position. We are currently short right here from 34.45, currently trading at 33.91. So it's really about a flat position. Their big ace in the hole, so to speak, is Alibaba. They own a percentage of that company. But again, look, all the trade triangles are down. Why is it going down? I don't know, but the reality is Alibaba is filed for an IPO. Whether that's successful or not, we don't know. Maybe that's the top of the market, the bottom of the market. We don't know at this point in time, but our trade triangles will tell us. Now, we have how you find these portfolios is very simple. You just click here on Market Club. It's on the home page of Market Club, and you can see these are the model portfolios we track every day for you. There's the Internet portfolio, which we just showed you. There's the perfect ETF portfolio, which is a very, very good for conservative investors. It's 401k, IRA accounts, perfect portfolio for those type of accounts. The World Cup portfolio is simply a futures-driven portfolio, and I think you'd really like that, to have some sort of diversity in an overall portfolio. So you could have the internet portfolio and the World Cup portfolio, divide your money up, and you'd have a very nice balance. But taking a look at the internet portfolio, just click here. So they are MarketClub's internet portfolio, 65% return last year. Here are all the positions in that portfolio right now. You can see Facebook, sidelines, as I said, short on Netflix, short on Yelp, short on Yahoo, short on Amazon. So we also show you exit on a green weekly trade triangle at $337.50. We tell you when to get in and out. There's no guesswork here. You can actually do this quite easily from home. So going back to our next portfolio, just click here and I'll show you that very quickly. That's the perfect ETF portfolio. Here the returns, not stellar, but very solid returns. Only 1 year was, but remember you avoided the huge meltdown in 2008, and you had steady returns from there. And we're up about a little bit this year so far, but not very much. But again, it's very, very conservative. The idea there is not to lose any of your hard-earned money. So there are all the positions we have, and these are all ETFs, currencies, S&P 500, United Oil, gold, and so forth. Very nice diversified portfolio. It's not going to knock it out of the park. You're not going to have 100% returns here, but it's going to be very, very solid. Looking at our World Cup portfolio, on the other hand, you see returns of 500%, 48%, 35%, 186%, 77%. These are really super returns, but you're trading futures, so there's leverage involved. A little more risk, but you can see the positions: corn, wheat, soybeans, crude oil, spot gold, spot dollar index. So it's done very, very well. Again, this is a high risk, but the rewards are higher. So hey, if you have any questions, simply go to our Q&A, which is on every page. Just click there, ask about our portfolio, see how they can help you stay alive and thrive in 2014. Hey, I'm Adam Hewison. Thanks for stopping by. Every success using the Internet portfolio from MarketClub, the World Cup portfolio from MarketClub, and the perfect ETF portfolio from MarketClub. I'll see you next week. Have a great weekend, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.